of 600 seconds of trading. In the next 600 seconds, I'm going to provide you guys with a quick update on the markets. But before we start, as always, I need to stress that trading financial markets, unfortunately, is risky, and there's a general risk that we'll lose all of our invested money. Okay, if you're new to this presentation, then let me introduce myself. My name is Alejandro Zambrano. I'm the Chief Market Analyst with TheTradeCaptain.com. I used to work for Daily FX, where I used to hold a daily webinar and publish articles for many years. In fact, I joined FXCM in 2009 and stayed with them until 2016. After that, I set up my own little thing, and then after that, I joined Amana Capital in 2017 to open up this website. Now, why should you be watching this? Well, because I've been trading for many years. And so I, tested most of the strategies. I've met a lot of successful people, and the end result of my activity and also being in the industry is that I'm a profitable trader. So hopefully, after watching this presentation, you can become better with your trading. I'm going to share with you guys what I think is happening with the markets as well. But bear in mind that while I've been doing this for a long time and I'm profitable, doesn't mean that I'm always right. In fact, I lose, I think, about 60% of the time. However, when I win quite big, and when I lose very small. So even though I'm not right more than 50% of the time, I'm still profitable. As well, I'm going to share with you guys my views on the markets, but this does not make up trading advice. Rather, it's made with an educational purpose. For more on this, click on the research disclosure statement at the very bottom here at the page. Okay, let's kick off. Good morning, Maurizio. Thank you so much for joining us this morning. If you guys want to join us in the chat box, then just sign into your YouTube account. You'll be able to join. As well, don't forget to like the video. You just click up here and then click here to like. All right, let's kick off, and we're gonna start with the euro. And the euro is up a bit today. It's up with about 23 pips from yesterday's New York close. And the market is unfortunately trading sideways between 115 and 118.50. And yeah, the market is moving up a bit, which is what we talked about yesterday. But there's no point trading this right now. When the market is trading the way it is, it's very difficult to have a strong view and to trade this successfully. Maybe sort of the only, no, not even that. I mean, it's very difficult to trade, at least for me, these sort of conditions. I like markets when they're trading to the downside. You might remember the market was boring here as well. And then I said, you know what, let's take it easy, because we did try to get involved in these moves, and I even think we tried to sell. But then I think somewhere here in the middle, I realized, like, hey, look, this is not going anywhere. Then we took it easy, and then eventually the market traded below 121.50, and it declined all the way down to, well, 115. And we shared it here, and I discussed about it here in an ebook published on May 1st, where I said that the market could tumble to 117.15. May 1st, well, I think we're here pretty much. And I said the market can continue to move to the downside. But the actual setup was shared with you guys already here. In fact, we were reading. So I think the same sort of a rule applies here. Let's just take it easy. And, if the market trades to the upside and breaks this high, I think maybe we'll do something like this. And until that happens, let's just allow the market to narrow down. If the market itself continues to narrow down between between this high and sort of continues to trade sideways, like within this range here, then that would not surprise me at all. And then eventually might have some sort of a breakout. Here's Bitcoin. Bitcoin is heating up. You have a head here. I think this is a head, right shoulder and left shoulder, and the neckline is a very nice horizontal neckline, which is not that typical, but it's sort of a textbook example. And the difference between the head and the neckline gives us the target. You can see here is $1,063. Put that on top here and suggest that the market could trade, well, up to the actual target is 7,908, more or less. We have a high here as well, which is a high here from June 7th, which could be touched. So on a push here, I think it's going to go up, down, and then potentially up. We'll see what happens. I'm not sure if the market is ready for another bull move here. I have a feeling that most people have given up on this market, and probably we'll see what happens. I'm not sure if it's going to rally like it's done in the past. I think first, people are very skeptical because of this, and the market needs to stabilize, and then eventually I think traders are going to be happy to get involved again, but I'm not sure that's going to happen anytime soon. The last time we had a massive rally, the market peaked in November 2013, and it was first in pretty much November 2015 that the market properly ended the bear market. Obviously, it ended the bear market down here, and if you would have been an early trader, investor, you would have made 50%. I'm laughing because 50% is not a lot in Bitcoin. And then eventually move to the upside. And if the same thing happens here, then that would not surprise me. In other words, if this is a boring market for the next 2 years, then that would not surprise me. Anyway, let's not speculate too much about what might happen in 1.5 years time from now. In the short term, it's very straightforward. Take out the high, goes up, goes down, probably up. This is a valid trade idea. The risk here is the risk reward ratio is not the best. You're risking about 11% to make 15, so it's less than your risk. But if you're lucky, it goes up and it continues to go up higher. And we would just need to see how it plays out, because we don't know. This is speculation at its purest. We don't know if we move up here and people want to buy more, and we just need to wait and see when we're up here. Here is gold, and gold, it's trading sideways, and we reached this levels I wanted to reach here. And since then, I think it makes sense to sort of the market could head to the upside, because we did not trade below 1236 yet. I'm not trading the upside though. I want to sell again on a break to 1236. I'm not sure if that's going to happen. Now here's crude oil. Crude oil on West Texas crude oil is, as you can see, is in a bullish option here for this year. And we're trading sideways, and I said we'll break the downside. We're probably going to go down, and that played out fine. Now we're at support, so this market is probably not the best one to be buying, that we should be buying. However, though, I don't really selling. I don't think we should sell. However, though, I don't really think we should necessarily be buying here yet, because if you look at Brent crude, most brokers, if you're trading with the CFD brokers, they call it UK oil. This is UK oil, and what is interesting here is that the market looks obviously different to West Texas, but it was stuck in this big rectangle pattern. And yesterday, the market traded below support, which was 72.45, and that really opens up for a decline. I think down to 68. But the actual pattern itself, the difference between the high and the low of this pattern is $7.05. So if we add $7.50 or $7.05 from the breakout level, it suggests that this market could decline to 65.38. Not sure if this is going to work out, but the markets, spent quite a lot of time here. It took about 2 months for this pattern to develop, a bit more than 2 months actually, and that's usually a very good sign. Not a pattern that takes like a year to develop is difficult to trade, but things that are maybe 2-3 months, that's even better. To give you an idea, euro dollar up here traded sideways from January up until March, so there's some solid 3 months, a little bit more than 3 months, and that was a solid trade. Gold, on the other hand, is only spent here 17 days. So I'm not sure if this is going to be a solid setup. But here you remember the market was trading sideways from January up until May as well. And at the end of the day, this was a solid breakout. So solid trade, down, up, down. So hopefully, crude oil continues to trade to the downside. Now this is the German DAX. The German DAX, though, it's very, what can I say? It's a bit difficult to do anything when market looks like it does here. There's not a lot of momentum. We'll have some sort of breakout at one point, but there's not much happening here right now. And that's it. Guys, if you have any quick questions, just pop them in the chat box. Good morning, Assam. Thank you so much for joining us this morning. I hope you're doing well. I wanted to let you guys know as well, we are hosting a webinar on the 25th. And definitely a good time to join if you want to learn more about it. Why? Because I invited a guy called Ryan Case from a company called Kinesis. And Kinesis itself, they're developing their own coin, which is a coin backed by precious metals like gold and silver. He's going to come and talk a bit about his project that he works. It's a big team behind that project, by the way, so it's not just him. And the first part of the presentation, though, is going to be more of sort of his input on the top 10 crypto coins. So his view on Bitcoin, Ripple, AOS, Stellar, Cardano, IOTA, and Tron, and Mo. The idea is that we should be able to look at coin market cap. Should be able to look at coin market cap and look at the top 10 coins, which are these ones, and sort of get an understanding of what's the difference. Like, what's the difference with these top coins? Like, who of them are actually offering value? How are they offering value? What makes them all different? We're gonna have a conversation about that, and he'll provide his input and sort of give us a bit of an idea here what everything's all about. So if you don't know about the top coins and you want to learn more about them, then feel free to join us here. Just click on education and webinars, and it's going to be a live webinar, so make sure you join us for that. Okay, we have S. Joko. Good morning to you, sir. So good question here. So Joko says that yesterday I said that the euro-dollar will trade sideways for the next 2 weeks and prefer going on holiday. What determines the time factor? The time factor has to do with, let's see if I can load charts. I guess it comes with experience. Hard to explain really. Firstly then, of course, so it is the holiday period, right, in Western Europe. And people literally on the beach, most of them. I should be on the beach as well. I'm going to be on the beach next month. But sort of, I guess the best explanation that I can give is just that this pattern has been trading sideways since, well, June technically. So June, so we've now been stuck here for 33 days. So it's 1 month. By the end of next week, it would have been complete of 2 months, pretty much. So when something's been trading sideways for, say, 2 months, then if we add another 2 weeks to that, it wouldn't be surprising. Say, for example, if something has been trading sideways for 5 months, well, the likelihood that I trade sideways for another month or two to make it 5, 6, 7 months would not be surprising. So it's sort of, if you traded sideways for 2 months, well, if it continues to sideways for another month, that would not be surprising. And 2 weeks would definitely not be unsurprising. So it's sort of those relationships that are, I think, are interesting. As well, if you look at the market in general here, like after a big party, not that this was a massive party, but after a strong decline, the market just needs to trade sideways. And here to give you an idea, this is why I suspect that this is why I suspect that something like Bitcoin can trade sideways for a long time. So here the euro traded from 114.06 all the way down to 105. This was what sort of the Bitcoin moment of the euro. You might say, well, 24%, that's nothing. Yeah, but in 2014, you could still trade with about 500 times leverage. And now, in days, you can trade with 200 times leverage. Obviously, that's going to change. But here it was very, very obvious what was going on. And literally every man and his dog was selling. And it was quite straightforward to make money in this period if you were following the trend. And after this sort of party, which was again very relatively easy to sort of work with, you had boring time. So here you had this consolidation period of 26 months, or from say early 2015 up until end of 2016, to mid 2017. So yeah, I hope that explains the question. So again, if something trades sideways for 2 months, so say 8 weeks, then it's very likely that it trades sideways for another 2 weeks, maybe even longer. So it's always that relationship. It's less. It's always less, and maybe half of sort of the time is spent. Okay, I think we fulfilled our promise to provide you guys with a quick update on the markets, as we usually do at this time of the morning. Again, if you like the video, don't forget to like it. It's really important because this way you support this presentation. And tune in tomorrow at 9 a.m. London time here at the live trading room. Have a good trading day. Thanks.